All right, there we go. Peace, family. Thank you guys for tuning in. Today, we are going to be covering the future of wealth. Make sure that's blown up. Let's go ahead and get started. The future of wealth, creative finance in the crypto era. The burden of legacy finance, slow wire times, legacy international transactions trap working capital for 3 to 5 days, high intermediaries. Banks extract 3% to 5% in foreign exchange and wire transfer fees. Systemic friction, outdated infrastructures rely on multiple manual checks and third parties. The real world cost correlation, a single $500,000 international payment can cost up to $15,000 in traditional fees. The status is critical failure detected, legacy banking system, friction analysis. So, right now, we are dealing with something that is crumbling from the inside out. What is the solution? Decentralized finance is the solution. Secured no ledger, peer to peer. The peer to peer revolution, decentralized finance, DeFi, represents a major leap forward, creating an open, permissionless financial system built on blockchain technology. DeFi allows users to lend, borrow, and earn interest peer to peer without relying on centralized banks. By utilizing self executing smart contracts, these platforms automate financial agreements, increasing the transparency and reducing overhead costs. Platforms like Aave, Compound, and Uniswap enable users to manage assets directly, while blockchain infrastructure reduces transaction settlement times from days down to minutes. I don't know about y'all, but that's a plus. That's a definite plus. Dynamic yield, CeFi versus DeFi. Cryptocurrency introduces dynamic methods for generating yield outside of traditional savings accounts. Traditional CeFi savings, bank discretion. Standard accounts rely on centralized bank discretion to set static, often lower interest rates. Custodial intermediary. Capital control is fully surrendered to institutions, lacking individual transparency and immediate accessibility. Static structure. Locked yield remains fixed regardless of real time macroeconomic demand or market shifts. So your yield remains locked even if they have a market demand for more of your capital. You don't get to see the interest generate significantly in a CeFi structure or a centralized structure. Decentralized DeFi yield. Decentralized pools, individuals and businesses earn yield by providing liquidity directly to automated protocols. Algorithmic rates, dynamic yields are calculated based on real time market supply and demand instead of bank discretion. Sovereign control, deploy digital assets into institutional grade protocols while maintaining total funds transparency. So if you are deploying your capital, you are in control the entire time. For most of you, that's never been heard of before. Decentralized lending, on-chain capital access. Decentralized lending protocols unlock working capital by allowing users to borrow directly against their digital assets. This system completely bypasses traditional credit checks and lengthy bank approval processes. Instead, Self-executing smart contracts automatically manage collateral ratios and liquidation thresholds because these lending markets operate on chain, borrowing costs, and available liquidity are visible in real time. This provides immediate access to short term capital by collateralizing cryptocurrency holdings, eliminating the manual oversight required in traditional credit facilities. So, I don't know if you guys notice or not. Maybe you do, maybe you don't. But there is a lack of access to capital because of the quote unquote color of our skin. That's a subject for a different time, though. But this is a solution. Navigating the crypto frontier. Strategic compliance. Successfully navigating the crypto frontier requires balancing innovation with strategic risk management. Proactive cryptocurrency regulation is establishing clear guidelines for tokenized assets, custody, and anti-money laundering procedures to maintain compliance. Companies utilize smart contracts for real-time, auditable tracking of digital holdings, generating transparent financial reports. In other words, we'll be able to actually see what is going on in the background. Normally, you're not able to see where money is moving from or to in the background, and the bank has the control. This gives us the control. Risk mitigation alert. 41% of companies view fraud as a top risk in traditional transactions. In contrast, blockchain utilizes advanced cryptographic methods to protect every transaction, making unauthorized access or data manipulation extremely difficult. That's another plus. Now, here's a real world use case. Wyoming empowering retail consumers. The state's pioneering regulatory framework establishes unprecedented consumer protections and secure access points for everyday digital asset users. The Frontier Stable Token, FRNT, the first state issued blockchain based stable token designed to provide everyday retail consumers with secure, transparent, and ultra low fee transaction capabilities. 100% backed, fully secured by physical US dollars and short duration treasuries held in transparent trusts. Multi chain utility deployed across 7 major networks, including Solana, Base, Ethereum, and Avalanche, to ensure broad consumer accessibility. Retail consumer protection, uncompromising guardrails, enacted through strict legislative measures to safeguard private assets and digital sovereignty. Kiosk Framework HB 0075 mandates strict banking rules and money transmitter licenses for all virtual currency terminals to eliminate street level fraud. Private Key Protection HB 86 legally protects courts or institutions from compelling citizens to disclose their private cryptographic keys. If you don't know, and it's your first time hearing about cryptographic keys, anytime you create a wallet or purchase a hardware wallet, it comes with a seed phrase that is 12 words protecting your assets. You are not inclined to give up your seed phrases. As long as you hold your seed phrases in your head and write them down in secured locations that only you know about, you protect your assets. Now, we do have a class coming up on September the 1st, the Bankroll Banking Academy. Master the mechanics of wealth building by leveraging digital assets for institutional grade collateral, strategic debt, and valuation optimization. The core correct academy curriculum, again tongue tied. Collateralization. Learn how to lock digital holdings securely to unlock liquid working capital without triggering taxable events. Debt architecture. Structure non custodial loans and utilize low interest decentralized protocols to fund physical or digital acquisitions. Appreciation dynamics. Position portfolios to capture upside volatility while mitigating risk through yield bearing assets. Depreciation and taxes. Master strategic tax harvesting and cost basis management of digital assets across standard fiscal periods. Now, the current enrollment offer is the early bird special. It is a one-time payment of $199. The standard tuition starting September the 1st will be $999 at the regular rate. You can secure lifetime access to the Academy vaults before standard pricing takes effect. Learn to build your decentralized bank. So, if that is something that interests you, I would definitely click the link in the bio, or you can reach out to me via email at bankrollwealthbuilders@gmail.com. Thank you, and until tomorrow for the next video. Peace, family.